Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, August 27th, 2021. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. Today we'll look at large cap stocks as they break two new records. The Russell 2000 small caps are very close behind and they're surging towards new records. Market breadth is improving, and we'll look at that as well. They may negate all the divergences that they've been building lately. High yield junk debt is approaching 52 highs. This is good news for stocks. Treasury bonds at the same time could be also getting ready for a breakout. So we'll see if that will make a difference for the stock market. And dollar moves lower while gold has broken above resistance, which turned into support. I'll explain what I mean there. It's actually quite interesting. Possible inflation is coming, so yes, gold could appreciate in times of inflation. For my subscribers that are paying subscribers, I have two newsletters. One is called Elite, where we trade various ETFs, large cap stocks, commodities, forex, and cryptocurrencies. And we also have another newsletter called Speculator. You can also see there's a lot of stocks there. We cover a lot of new breakouts, so stocks that are recently were in a downtrend and now have turned and became in an uptrend. So stay tuned if you are a subscriber. Right, let's look at S&P 500. So again, we're looking at new all-time record highs. Just today, we saw a close above the previous highs. Today is a new all-time record high close. Again, nothing has really changed. You can see this little blip, I guess, is the fall of Afghanistan. You can see basically nothing really happened there. From the point of view of the stock market, from the point of view of human tragedy, money invested and energy invested in that endeavor. Of course, a lot has happened, but stock market does not seem to care at all about this. So stock market is going higher. Nothing again has changed in the sense of our analysis. And our analysis remains that we're in a bull trend. The bull trend has started with a breakout back in April of 2020, right there where I'm hovering. And since then, for this security, the S&P 500 futures or S&P 500, any of the ETFs that are available that track the security, what we do is we buy when the security closes above the blue line where I'm hovering. So again, these indicators are available for you. You can find out more by clicking the description link. And when we buy it, we just basically hold and we trail. So in other words, we advance our stop, we move our stop as the stock market goes higher, and we trail at the blue support resistance line. You can see again, nothing has really changed. So if you bought it back here in April of 2020, you would simply move your stop higher today. And your stop again is at the blue line. So how do my lines correlate to other parameters? So we can look at EMA. So this is EMA, what do you call it? Exponential moving average. So usually people look at 200-day EMA. It's a good measure. You can see it's completely straight. It's kind of funny actually. So you can see that my lines are really not based on any kind of moving averages or anything like this, but note that currently the EMA and my blue line, the blue line is where I would be buying. So let's say we see a pullback towards the blue line and I would be buying it there. So currently the blue line is around 11% away, and it happens to be in the same general vicinity where the 200-day moving average is. So it would make sense for a pullback, if it does occur, to pull back towards that level. And once again, that level would be an excellent buying opportunity once the bottoming pattern is in place. But for now, we're keeping a bullish outlook. What if we, right now we're at 4,500. What if we go to 9,000 and only then pull back 10%. Can that happen? Make a comment. What do you think? Dow Jones, not really much different. We're almost at new records. So Dow Jones is lagging slightly, but overall, it's the same general principle. Breakout occurred here in May of 2020, and we had several opportunities to buy around the blue support resistance line. But since then, really, were no opportunities. And again, we're making records, and we're close to records. So correlations, I'm going to show correlations again. What's a correlation? Correlation is a measure of how closely one security follows the other security. So in this case, correlation is to the S&P 500. And you can see it's mostly positive. For Dow Jones and S&P, it's basically identical. So for all practical purposes, we can say that Dow Jones is identical to S&P. Again, we're basically trailing at the blue support resistance line and advancing our stop if we bought it back here in May. We would not be buying it anywhere else. There are many other securities, such as individual stocks, other ETFs that have indeed pulled back towards the blue support resistance line, and we have, for example, bought it there. I'll show you in a second with small caps IWM. Here's NASDAQ. It's even stronger. So NASDAQ, you can see that it's broke out right there in April of last year, and once again there is no opportunity to get in for this particular security. But once again, I'll show you that you don't really need to limit yourself to just trading ETFs or just trading NASDAQ. Some people only trade NASDAQ, but they will use, for example, futures, and they would trade it on like 5-minute chart. So I don't recommend trading anything on 5-minute chart unless you're trading things like Forex or commodities or Bitcoin. But if you trade, or futures as well, and you really need to know what you're doing. But I would under no circumstances recommend you guys trade stocks on anything but daily charts. So again, daily, see right there where I'm hovering, you can change the time interval to hourly, blah blah blah, whatever. For stocks, and this is a stock, QQQ is a stock, you want to stay on daily chart or higher, so daily, weekly, or monthly. The reason being is because it's not continuous. So over the weekend there is no trading, and additionally you can see there are gaps, like for example from this 16th to 19th of July there was a gap. And if you're trading it on intraday chart, like on a 5-minute chart, or 5-minute chart, you will have those gaps, and they will mess up your trading. So again, don't trade stocks or ETFs on anything but daily or higher. This is as much of advice I can give, because I'm not really a registered advisor, right? So anyways, for QQQ, for NASDAQ, there is no difference again, so we can look at correlations. Correlations are humongous. You can see S&P correlates highly with NASDAQ. Only very occasionally there is a negative correlation. Something happened. For example, in this case, QQQ pulled back sharply, but S&P probably did not. But overall, for all practical purposes, you want to treat this large cap ETF as highly as it correlates highly to S&P. Okay, and here's IWM, and here's what I'm trying to say, that occasionally we have they correlate, but they don't correlate exactly. So you can see this for IWM, small caps. Correlation here back in September was not exactly identical, and we actually took advantage of it, because at that point it presented an opportunity. The breakout, the same thing occurred back in May of last year for S&P, for IWM, small caps. But as I just showed, for large caps, there was really no opportunity to get in around the blue support resistance. But why would I want to do it around the blue support resistance? Because this is a lesser risk entry. So on this pullback, the risk is smaller, because I need to put my stop somewhere. And if I'm buying up here, I need to put my stop where? Okay, so what I usually do is when I buy on a touch below the blue line, I put my stop at the yellow line. You see, that's initial stop. So once your target is reached, you move your stop. You see, so the target usually is around the green line. So we get in. Once the target is reached, we move our stop to entry from after the entry. You see, it's really quite straightforward. If you don't understand something, send me a message at MasterCharts Trading. All right, so this is IWM small caps, and we are close to new records. You see, so old records were right there on the 15th of May at around 234.53, 234. So we are getting really close. We're at 226 right now, and especially today was very encouraging with this really big candlestick. A large green candlestick is very bullish. Also, you can see from this 20th of August to 23rd of August, there was a gap up. So this is indicating buying pressure. People want to own stocks. There is a shortage of stocks, if that makes any sense. So up till recently, the NASDAQ, the S&P, and the large caps, as I just showed, they were making new records. But the small caps have not made a new record since the 15th of March. So again, I'm going to show you, NASDAQ. Here's the 15th of March, and you can see it made a bunch of new records almost every week, or if not every day. Small caps did not. Small caps were trading sideways for all of this time since March. So this is what we call a divergence. Small caps have diverged from the large caps. How important is it? It's important if you trade small caps. I trade a lot of small caps, so yes, this underperformance definitely weighed on my success rate right now. But what I'm looking at right now is that once this record is made, I think this divergence will be put to rest. And so if we see a new breakout, new records for small caps, then we can see a substantial move higher for the entire market, actually, not just for small caps. We already moved a lot. Look how much we moved, from the latest breakout, which was in May of last year. You can see that we moved a significant amount. We moved 64%. We can move that much again in the up direction, you see. So overall, I am pretty bullish on the stock market right now, and I have been pretty bullish. This underperformance again for small caps seem to be resolving, so this is good news. Okay, so next thing I wanted to touch is on market breadth. So here is market breadth. So to look at market breadth, I go to stock charts and I look for this symbol, $NYAD. So this is New York Stock Exchange advance minus decline issues. So how many stocks per day? This is each day's worth of data, so daily. So on each of these days, how many stocks moved higher and how many stocks moved lower? And so we subtract declines from the advances. One more thing is you want to change this to cumulative. You see this type? So if you live with those candlesticks, I'm going to show it again. I already showed it before. If you live with those candlesticks, it's just gibberish. It just shows you how many stocks are moving higher, how many stocks are moving lower. It makes no sense, What you need to do is you need to change it to cumulative. What does that mean? That means what we do is we take the yesterday's number of advances minus declines and we add it to today's number. Did that make sense? If it didn't make sense, make a comment or send me a message. Okay, so what does this show? Okay, this shows that market breadth, in this case, advances minus declines, made a new high right there on July 1st, 2nd. And S&P 500 also made a new high. We can change, I'm taking S&P because of the correlations. Once again, we can put NY New York Stock Exchange Composite Index in there, but it won't change really the picture. You can see that S&P 500 was making new highs, okay? So it was making new highs constantly. But the breadth, the advances minus declines, made a new high here in July and haven't yet made a new high. So this is a divergence. You see, this is a divergence. How much of a problem that is, I'm not yet sure, but it is pretty clear on this chart. It was not there before. You see, previously it was continuous in the same time. So what I'm trying to say is right now this divergence seems to be coming to an end. We can update the chart with latest data. Yeah, this is the latest data, and this divergence seems to be getting closer and closer to be resolved. So if this line makes a new record, then there is going to be no more divergence. Most likely this is a product of small caps underperforming, because this is advanced decline issues. So how many stocks are making advances, how many stocks are making declines? There are many small cap stocks. There are 2,000 here, and there's a whole bunch of them listed on the New York Stock Exchange New York Stock Exchange. So this makes sense. So we are underperforming in number of stocks that are making new highs. We can go further and examine this even further by looking at New York Stock Exchange advanced decline volume. So how many stocks, or rather how much volume is positive per day, how much volume is negative per day, and then we add and subtract, add the number to the yesterday's number. The divergence was actually rather pronounced. You can see from the June into recently, but literally today this huge enormous surge occurred. You see, so this volume advanced decline volume surge also is showing that we're approaching a kind of resolution of this divergence. Again, I think this is a product of new record highs for the large caps and a large surge for the small caps that occurred over the past week and especially today. So this is a large surge of advanced decline volume. So overall what I'm seeing is we're close to resolving this. Divergence, and this is actually very good news for the stock market. Another good news, I think, is the high yield junk debt, which is approaching new records. So let's look at junk stocks, the junk debt. So this is this is high yield bonds. So high yield bonds are also called junk bonds, and they are considered low grade, and they also are have a high correlation to the S&P 500. So I'm going to zoom out and I'm going to show you what I mean by correlation to the S&P 500. So you can see that this, even though these are called high yield bonds, you can see that they usually do the same thing as the S&P 500. On occasion, you can see they go into negative territory, but by and large, they do the same thing. So overall, we're seeing junk debt. These are 52-week highs right here in July, and once again they're approaching new records. So if we make a new record, once again even right now there's not really that much of a divergence, but if we make new records, then there'll be very little divergence to speak about. So overall, again, good news for the stock market, especially if we make new record highs for the high yield debt. Moving forward, looking at treasuries, TLT. So in my opinion, treasuries went into a bear market starting here on January 6th. We had another opportunity to get in here on 27th of January on the short side. latest alert and latest opportunity to get on the short side was right there on the 9th of July. Clearly it was not yet successful. It was also not yet a failure. A failure would occur if we close above those bullish levels, which are currently at 154. However, we can project our my indicators into the future, and you can see that in the future the indicators are actually curving down. So this is showing that the price will need to travel just a little bit further higher to enter a bull market. What does that mean? That means the treasuries will be in an uptrend, treasury bonds. And this is despite all the talks about tapering, about no longer purchasing treasury bonds and all that stuff. So actually it matters very little, but I barely ever watch the news, and definitely don't use the news as my decision making process to buy or sell securities. Correlations between the S&P and the 20+ year treasury bonds are quite negative. So notice, usually when bonds go up, stocks go down, but not always. All right, so usually when bonds are in an uptrend, stocks are in a downtrend, but occasionally they're both in an uptrend as well. So should we worry about this movement of treasury bonds higher and potential entry into the bull market? You can interpret it as a sign that there is increasing fear in the markets. So when treasury bonds are being bought, this implies there is more fear. Rightfully so. There is Delta variant, there is Afghanistan issues, there's all kinds of domestic problems in the United States. So we are potentially entering some sort of a more cautionary phase. But if I'm correct and small caps break to new records, then perhaps large caps, perhaps the stocks will not really, come under pressure, even though treasuries could be also headed higher. So there were periods in the stock market history when both treasury bonds and stocks were moving in the same direction. It's unusual, but it's not that unusual. So again, I wouldn't necessarily try to project the movement of bonds onto the fate of the stock market yet. Okay, so let's take them kind of separately and just look at them in separate. Look at them separately. We trade treasuries. It's another good security to trade. It adds to diversification of your portfolio. So you can have treasuries in your portfolio, and you can have also stocks in your portfolio. I don't really keep either one of them for long, but I use them to diversify. You can, buy stocks on occasion. You can also buy bonds on occasion. All right, moving on to dollar index. So dollar index, I think right now is in an uptrend. So 3 really strong signals, and yet not really a strong move higher. So today we had, over the past week actually, dollar index has been moving lower and lower, and it closed at the lows for the week. And notice where it's closing. It's at this blue support resistance line again. So I'm watching this for a breakout failure. So if dollar index moves lower, and especially if it closes below 91.28, then we're most likely this is most likely a failure. And at that point, I would be pretty emphatically selling the dollar. In other words, I'll be buying other currencies with the dollar. So for example, I would be buying euro if we see a failure here. So far we have not yet seen a failure, but let's look at gold to see where this is all going. So if you listen to my previous videos, I noted this candle here on the 9th of August, and I said that this is very much looks like a bottoming candle. This is a huge hammer-like candlestick. So hammer means it just kind of looks like a hammer. So this is a handle of a hammer, and this is the working part of a hammer. So hammer candlestick occurs when the bears really try to push the prices lower, but the bulls came in and said no, and they bought it out. And so the low that was made was not where the close occurred. So notice then what happened afterwards. We had a significant rally, and especially significant was this breakout on the 23rd of August above this red support resistance line. You can see this red support resistance line. Right now, we can see it turned into support. So I'm going to zoom in even further. I'm going to show you what I mean. So breakout above resistance on the 23rd of August. And now it turned into support, because you can see on 25th of August we touched it, did not close below it. On 26th of August we touched it, did not close below it. Today we tried to close below it, touched it, and then surged. So this is a significantly, good looking candle today. So this big, this is a big candle. It's 1.48% for the day. It's significant. Projecting the indicators into the future, you can see that the price, or rather the levels, will get even closer. So we're approaching bullish levels for gold. This could mean that inflation is indeed on the horizon, and I mean inflation like 1970s style inflation, where there is demand for gold or precious metals, for example. And like I said, this would imply dollar will move lower. You see, so this interplay between dollar and gold, if you trade forex, is very important to note. So if gold continues higher, breaks above this blue line, which is currently at 1862. So if we see a close about 1862, this is going to be a very strong bullish signal, because notice that we basically did not go anywhere on the bearish side. And I kept talking about this bearish side since March of this year, and you can see there was not really a lot of movement to the downside. There was attempts, and the latest one was on the 9th of August, a really valiant attempt by the bears, but it so far has not really succeeded. So again, we need to really watch, and we need to be very flexible. People kind of sometimes accuse me of, well, didn't you say a few weeks ago that you're bullish on this one thing? I'm like, yeah, but now things have changed. So we need to be very flexible in our minds and our understanding of the situation. If the situation changes, we need to roll with the blows. You see, we need to change our mind. So I have no problem if we see a close above this 1862 level, or in the near term even 1853 level, then we will start buying gold. We will start buying gold miners. There's plenty of oversold gold miners, and we can definitely find some good deals there. All right, so this is it for this week's recap. Head over to MasterChartsTrading.com. That's one word, MasterChartsTrading.com. Click on products and sign up for one of the bundles. So number one, I have the just trading indicators, which are these lines on the chart: green, blue, red, and yellow line. They greatly simplify your trading. I use nothing but these lines with excellent results. If you want the indicators and my newsletters, like I said, I have two newsletters. One is called Elite, where we trade forex, ETFs, large caps, commodities, gold, cryptos, etc. And we have the Stock Speculator newsletter, where we trade many different speculative stocks, such as, for example, all of these stocks. You see, these are all going to be covered in the Speculator newsletter. Additionally, we have a third ultimate bundle level where if you are looking to trade on your own, you can also get what's called a stock screener. And the stock screener would provide you with stocks that are, for example, closing above the blue line or closing below the red line, if you want to sell it short. So this is more for people who trade a lot, and you can see there's many different lists. You can choose whichever list you want to get alerts about, and you can see average number of signals per day, how many alerts you get per day. My personal preference again is for this list because I trade a lot of options, so all stocks with options is my favorite list. And finally, we do have indicators for MetaTrader 5.0. We additionally are working on a expert advisor for 5.0 MetaTrader. So if you're interested, we are looking for beta testers. So if you're interested, send me a message. You can go to help and contact. I'll be able to maybe give you a access to this early release for the beta tester. We're looking to have expert advisor up and running hopefully soon. All right, that's it for this week's recap. Have any questions, please let me know. Thanks for watching and have another great trading week. Bye bye.